Hello, my name's James Brackley, the Socialist Accountant, and welcome to this short campaign video highlighting my manifesto commitment to make sure that every branch in UCU is supported in analysing the accounts of your institution. In this video, I'm going to give you a quick run through of what sort of information is available to you and how it's potentially useful in your local negotiations, particularly if you're negotiating around a local pay deal or redundancies. And then also at the national level, why having a good understanding of the financial situation of our employers nationally is crucial to some of the national disputes that we find ourselves in. So I've done quite a bit of this work in recent years. Most recently for Beyond Education, we did a crowdsourced piece of analysis where just as the accounts were published back in February, we got as many higher education institutions to put together the finances of their institution. And we did a quick analysis just going into the March USS negotiations nationally. And what we uncovered from that work was actually, particularly the pre-92 institutions, and USS institutions had made an awful lot of money through the pandemic by expanding their student intake and cutting staff costs. So that actually, while they were pleading poverty in the negotiations, we were able to evidence that they were actually generating these enormous surpluses, and that those surpluses would meet the supposed deficit that we now know no longer really exists in that scheme many times over. And you can similarly use the accounts of your institution to tell the story of the financial position. So just to give you one example, a piece of work I did for the University of Birmingham demonstrated that over a 10-year period of time, they had enormous growth in their tuition fee income, initially driven by the £9,000 tripling of tuition fees, followed in the last 5 years by a big growth in their international fee income. We demonstrated that the percentage of the money that they spent on staff had dropped consistently over that period of time. And they'd also taken out huge amounts of debt, going from no debt whatsoever in 2010 to over £260 million worth of loans in 2019. And we demonstrated that the management of that institution had put the institution at risk effectively. And they'd driven down working conditions, driven up casualisation to compensate for this kind of bad management of the institution. As your treasurer, I would make sure all branches have access to resources so that you know what the important information is in the accounts that you can look for and how to access it. You know how to place that against the national situation, so comparing it to the HESA data, that's the Higher Education Statistics Agency, and being able to pull out that key information from your local accounts and make further data requests. Navigating sets of accounts can be really confusing. Sometimes the institution might post big losses or big surpluses, and management will come up with all kinds of excuses as to why we can't trust those figures because there's been adjustments, there's this, that, and the other. You can see here in 2019, the University of Birmingham posted these enormous losses, £115 million deficit in that year. But actually that was because they posted a one-off £126 million cost associated with covering the supposed deficit in the USS scheme. So the real situation was actually more like a £10 million surplus that year. That situation was actually reflected nationally in the accounts of all 180 or so institutions for which we have HESA data for. And you can see over the last 10 years, with the exception of 2019, higher education institutions posted enormous surpluses and profits across the sector. But these were somewhat biased by these sort of fictional, if you like, one-off adjustments for the USS provision. And what that means effectively is not only have they generated all of these surpluses, they've also put additional money aside to cover a supposed deficit in the USS scheme, those institutions that are in that scheme. So if you put all of that together across the sector, institutions have delivered £11.5 billion of surplus in the last 10 years. And on top of that, they've put an additional £5 billion aside for provisions for pensions. Again, for deficits we know don't really exist. This has left institutions nationally in higher education with cash position of £13.7 billion and additional short-term investments of £5.6 billion. So this would pay for our HE pay claim many times over. The 3% employers have offered us would cost them somewhere in the region of £600 million annually. So their liquid assets alone, their cash and short-term investments, would actually cover what they've offered us 32 times over nationally. And to add insult to injury, well, where do they spend all of this money besides piling it up in big piles of cash? Many of you will know there's buildings popping up on campuses all over the country. Well, typically universities across the sector spend over £4 billion on buildings every year. And even accounting for something called depreciation, that is the replacement of old assets, the net spend on buildings and capital expenditure is over £2 billion a year. Again, about 3.5 times what they're offering us in the latest pay deal. So this information is available for higher education institutions, for further education institutions, prisons as well, in the prison education sector. So I want every branch in our union to have the resources you need to analyse those accounts so that you can use them in local negotiations, so that you can challenge the business case around redundancies, and so that you can cut through some of the management bullshit that we hear on the finances of our institutions. To follow my campaign, please follow Brackley J on Twitter and the socialistaccountant.co.uk WordPress site for more information on my campaign.